Moses, thank you so much. It's a pleasure to
nice
have you. The
nice
market,
to
we continue to seeing this negative sentiment at the market, but I know that there's still some good bargain hunting going on. Talk to us about those stocks that you think investors continue to have on their radar.
Well, there are still some of those stocks. If you look at telecoms, particularly MTN, we are still bullish about MTN. And cement, we're still bullish about Dangote Cement particularly. For banks, we still believe in the likes of Zenith and GTB. Those are the two major banks that we think, at least no matter what the regulatory environment is, they are still likely to thrive. So these are some of the few names. In consumer goods, we are not so bullish about them, particularly the brewery sector. That place is not something that we really recommend for now. We are not solely bullish about what the performance of some of those stocks will be because of the environment where they operate. But apart from those ones I mentioned, the MTN, Dangote, and Nestle is still a good name, even in consumer goods, no matter what. Still one of those names that you want to pick in the consumer space.
Do you think that now more than ever for a Nestle, for instance, that the recent policy of the CBN to include it on the list of those companies that will be allowed to import milk, do you think that should we expect to see more rallying again into Nestle as a result of that news?
Well, it's positive for them anyway. So with or without that news, Nestle is one of those names that you want to pick.
So for the long term, those who are in Nestle long term, that's a good.
Yeah, it's actually good
for
for them. Yes.
Okay, but I was speaking to a trader a few days ago, and he told me that speculators, we're seeing more of them in the market, and he was pointing fingers at the investors from the fixed income market who were not used to playing long term as it were, according to him. And he's saying that their activities are the ones who are sort of distorting the market.
Yes.
I just want to run that by you. I mean,
I actually share the same sentiment too, because this year, because what most of them we're trying to do is to outperform fixed income, where yields are already like 6%, 7% level for a 1 year paper. So I think some of them will just try to make sure that they get return that's superior to that. So people that have that mindset will not likely to stay in the market for long. Once they see capital appreciation of 10%, 12% on their investment, they take it out, because with 12%, 10%, they're already better off than playing in the fixed income space for a year. So I think that's what will play out this year for the.
What does that mean for what does that mean? Doesn't that distort the market?
Yeah.
Because before, at the beginning of the year, there were certain forecasts in terms of the direction this market was going to go, but now we're having this.
I think that's most likely going to be the case this year, because if you look at the economic fundamentals, it's still not so strong for investors to stay for a long term. So most investors are buying equities because of the lower interest rate that we've seen in the fixed income space. That's the major thing that's driving investors to equities market. Apart from that, there's nothing special or something fundamental to say it will drive a long-term growth or long-term improvement in performance of the equities market. So that's way to play out this year.
But in the short term, for now, we're expecting full year numbers.
Yeah, exactly.
From
some of them may be playing dividend games, because some of these stocks, they have superior dividend yield compared to what you get in the fixed income space. So they will pick some of those names, and you expect that to continue. After dividend payment and everything,
we're going to be on the hunt for the next catalyst again. Is that how the cycle is going
exactly.
to
So we are to look out for the next catalyst that will support the equities market. But for now, we've not seen anyone, apart from the fact that rates in the fixed income are still low, and that's what is driving investors.
But can investors in the market take some solace in the economy, or maybe some fiscal policies, something positive coming from the economy?
Well, if there is one, for now we have not seen one, but if there is one, it will take time for us to say, okay, at this level, investors will be confident to buy.
The budget was passed early. I mean, we're expecting capex to
exactly.
start rolling out. That's good.
But the sentiment around budget has been the fact that it's not necessarily the early implementation or early passage of the budget, but funding for the budget. So it's not about we've not passed the budget on time, but we really have the money to fully implement that budget. We all know in the past that capital expenditure, part of the budget, is the one that will always suffer for any shortfall in terms of government revenue. And this year, we don't have a different view. We still have a view that look at what's happening to oil price currently, and the fact that our production level have even been struggling to meet up with budget targets. So you will expect a lower performance in terms of revenue compared to budget. So if that's the case, you will know government will try as much as possible to pay wages and salary, subsidy, and other recurrent expenses. The part of the budget that suffers for that is the capex, and that's the one that will have significant multiplier effect on the economic growth.
Absolutely. Moses, thank you so much. Great insight there. Thank you for talking to us today.